Good morning, everybody. So, look, obviously, nobody in the world knows who's going to win the election, and certainly nobody knows what the outcome of markets is going to be to the event that nobody can predict in the first place. You know, conventional wisdom and opinions are often a red herring, the worst way to possibly invest. The way we invest, the only way we think is prudent to invest, is to worry about where markets are likely to be in November 2025, as opposed to where they're going to be in November 2020, which is a bet or a guess at best. And if you look at where they're going to be in 2025, there's no doubt about it that equities definitely appear to be the most attractive core asset class versus government bonds, versus anything really in the fixed income world, obviously versus cash. However, even equities themselves are quite expensive. It's an unpalatable landscape, but one that almost forces you to be towards risk because there's no alternative.
One of the challenges, though, is in the near term, the economic momentum seems to largely be dependent on continued monetary and fiscal stimulus. And taking your longer term view, doesn't that introduce the potential risk of being involved in an asset class that's only been driven higher and flattered by increased liquidity and financial support? Are you arguing that we will see something like that through the next 5 years?
Look, I think, first of all, we have no idea. But if you look at where the last 10 years have been, we've been in an environment of incredibly supportive monetary policy. That, you know, it's literally since the great financial crisis. And that's been a near constant. Yes, rates have tightened somewhat, only to reverse again whenever things got a little bit tough, and we don't expect that to change at any time. Obviously, Powell and the other central banks have very explicitly said that they're not going to be raising rates for a long time to come. So the monetary policy side of the equation has always been loose for a long time and is likely to remain that way. The big question, especially over the last 10 years, has been one around fiscal policy, which has been quite light. But even that now is coming to the fore in a big way. You know, even if you look at some of these jitters around sort of in the US, where the Democrats have passed a $2.5 trillion or so spending bill versus the White House, which has offered 1.6 trillion. I mean, really, at the end of the day, something is most likely to get passed. It's going to be in the range of trillions. Support, monetary and fiscal, is going to be almost a semi-permanent fixture of the markets for the foreseeable future and really for years to come.